Chapter 2, Problem 5. This is listed as exercise 220 in your text. And this is basically a definitional problem. Do you know the meaning of these terms? Do you understand how they come about? Well, they want us to first ask, what's the balance of the returned earnings account on January 1st, 2019? Well, they told us that. They told us, they're asking us what the balance is January 1st, 2019. But they tell us that when they closed on December 31st, 2018, the day before, the balance in retained earnings was $42,100. Well, how much business do you think they did overnight? So the opening balance for January 19 is exactly the same as the closing balance from 2018. Then they say, what's the balance in the temporary accounts? Remember, the temporary accounts, these guys are the revenue and expense accounts. The revenue and the expense accounts are the ones that go on the income statement. So at the end of the year, we took all the revenue and added it to retained earnings. We took all of the expense, subtracted it from retained earnings, and came up with a new balance in retained earnings. But since we moved everything out of these, the balance in there is zero, zip, zilch, diddly squat, not a nail, nothing. Now, the next question says, what's the after closing balance in the retained earnings account as of December 31st, 2017? So we can't really find 2017, December 31st, but we can find January 1st of 2017, and we do it as such. Remember, our retained earnings account is beginning retained earnings, okay, plus net income minus dividends equals ending retained earnings. Well, let's see what pieces they gave us. This is 2017, December, which is the beginning for 2018. This is the ending retained earnings for 2018, which we have. We found that they told us, they gave us that right there, 42,100. So let's fill in the numbers and see what we need. We have that. Do we have net income? I believe we do. We have revenue of 19,400. So we have revenue of 19,400, and we have expense of 9,800. So 19,400 minus 98 gives us net income of 9,600. And they told us that we paid some dividends during the period. Of $500. So we need to add that back. Or well, actually we have to subtract that out because we're working our way up to. So we have all but one piece. As you know from any math problem, if you have everything but one piece, you can solve it. So this is the piece we're looking for. I'd call it X, but if you're math phobic, I don't want you to freak out. So I'll just call it question mark. And all we're going to do is we're going to work backwards. This says we had some number. We added $9,600 to it. We subtracted $500 from it, and we ended up with $4,200. That's all that's saying. So let's just reverse the process. We're going to start with the 4,200 because that's what we know we have. 42,100. And to get that 42,100, we'll add back the 500 we gave away. We'll subtract the 9,600 that we started with. I'm just working my way this way instead of this way. And when I do that, I find that my question mark has to be 33,000. So when you have a problem like this, lay it out. Use the formulas that you know. Lay it out, see what pieces you have, what piece you don't have, and then look for the piece you don't have. So, our beginning retained earnings, therefore, was 33,000. And then it says, what's the balance in retained earnings account as of June 30? I'm going to give you the official answer. I don't agree with it. Okay, they say the balance in June 30 is the same as it was January 1st. Technically, that's true because you don't go and do the additions and subtractions consistently as you go through the year. You do it quarterly or semi-annually or annually. So technically, it's the same as it was January 1st, which we've just found out was 33,000. But you know, because you're smarter than a textbook, that the minute you have an addition or a subtraction to the company's wealth, there's an immediate addition or subtraction to the value of the company, which is retained earnings.